Maybe it'll work when we get going. What's happening, everybody? Welcome to the Flow Show. Oh, there I am. I'm unstuck. Yes. We have this ongoing gag here. I mean, we're doing it on purpose because we think it's funny, but it's not funny at all. Where my screen freezes right when we go live every time, and we just had it there. Perfect execution, Straza. That's my partner, Steve Straza. How you doing, buddy?
I'm good, man. Technical difficulties. They arrived just on time for our
Yeah,
show.
you were having a little computer freezing there right before we went live as well. So yeah, sometimes when you're a crackerjack operation, this is how it works.
Computer freeze rhymes with the theme of today's show, which is the short squeeze.
Ooh, I was hoping you would bring me some short squeezy ideas because I I do love me a good short squeeze, and this does feel like the market that if there's going to be another leg higher, it's probably, my gut feeling tells me it's going to be led by some of these names that people think just can't go any higher, and then whoosh, and it's going to be led by the short squeezers.
We have certain scans that lend themselves to a certain time and place or a certain environment for risk assets, right? And an environment that is characterized by increasing risk appetite, improving, market internals or stock market breadth, risk on behavior, right, is one where you want to look at these squeezy names. What is a short squeeze? It's when a stock that is bet against, right, and has a high short interest, which is a high percentage of their outstanding shares are held by short sellers. And when a little bit of momentum comes into these names, you tend to get some sort of cycle that feeds on itself where these shorts have to cover, thereby increasing the price of the stock as that happens, and you get these massive short squeeze moves. So we ran a scan. We do it every week, actually every 2 weeks, because that's when we get new short interest data. Ran a scan last week, put out a report on the website where we outlined some longs in a lot of these names. Did you take a look at it?
I have not taken a look at it, not yet.
So I
I was
brought the
waiting for you
tables.
to hit me with it.
I brought the tables for you. This one is sorted by short-term momentum, the 1 month change. Everything on here has a short interest in excess of 15%. The days to cover is also shown here. We really like having a higher days to cover as well. You tend to see the best squeezes with a high days to cover ratio. Days to cover is simply just taking into account the average daily volume and trying to figure out if all the shorts were to cover right away, how many days would it take based on the average volume of the stock. So you could see here, ones like this Collegium Pharma, Immunity Bio, a lot of biotechs have days to cover ratios in the double digits, which really stands out.
Hasn't that Carvana been on this list for a long time running?
Yeah. So Carvana's here on this one. So this we have the x-axis is short-term momentum, the 1 month change, and the y-axis is the short interest. So you see Carvana on here, it's got almost 40% short interest. It's absolutely massive.
And that thing has been, I mean, since November. I mean, it was trading with a 30 handle in November, and now it's breaking 90. Like, what are these people doing?
So is this one that we could potentially put an option strategy on? Does it have a liquid enough options market? That's going to be the problem with a lot of these names, Sean. I checked on a couple of them late last week. Some of them just not really optionable.
Carvana is definitely optionable.
Thought it would be.
Yeah,
Traders
they've got weekly options and plenty of liquidity.
All right, let's flip it to the chart then. So you see Carvana here. I don't know, Gene, if you still have my screen up. You see Carvana here, Sean, still in the top 10, 34.8% short interest, 4 days to cover, and it's up as much as anything on our list over the trailing 1 month, so 60%. The momentum is there. The squeeze is more or less already on, right?
All right, so I'm looking at the chart, the Carvana chart. Do you have one, or do you want me to show it on my screen? Okay.
I'll mark it up quick, actually, because I just love this structure. Let's
So
the chart quick.
here's my first thought when I'm looking at this chart is this is as we've just established, it's a stock that has a lot of short positions in it, too much short positions, frankly. And we had a big gap following earnings at the beginning of what was that, March, beginning of this month,
February.
maybe about 4 weeks ago. We had a big earnings gap, which already is punishing the shorts. And it kind of consolidated. It traded higher a little bit from the gap, and it just kind of consolidated. And I would have to think that with this remaining short interest staying as high as it is, you've
Yep.
got these bears in the stock who are thinking, okay, that's it. We're done. This is it. This thing's about to roll over. And then, surprise, surprise, this week, today even, it printed a new high, starting to break out of that range. These shorts, I mean, these guys can be tremendous fuel to send this thing higher. I would classify this as a hard trade, technically.
Yeah. Agree.
But I think, I mean, this thing could rip to 120 quickly, given what we know about the short interest.
So, Sean, you just described the breakaway gap, which, Gene, if you have me up right here, mid-February, the last earnings report, this, 60 level shown here with the rectangle? What a polarity zone this was. August 22, prices peaked and rolled over here. July of last year, again in September of last year, another try in December of last year. Finally, you get the breakaway gap through that level. And then you're right, for the past month, just really high and tight in a classic, just textbook bull flag. So we've been chopping, we've been coiling here, digesting kind of the gains from last month. And this is all in the context of a textbook trend reversal. If you zoom way out on this one, let's just look at the damage that Carvana kind of took on coming off of its bull cycle peak in August 2021. Stock's down 99%, Sean, in late 2022 before bottoming. So this is just a massive trend reversal. You see the long-term moving average, the 200-day, flattening, now curling higher beneath price. Path of least resistance is now higher. This is the first little short-term continuation pattern in this new uptrend. I think you got to be long all day on a breakout here, and you're kind of getting it today.
Yeah, I like this a lot, Straza, and I think we don't need to even go that far out in time to play.
This is a short-term pattern, absolutely. And squeeze, you want a shorter time frame for this kind of a trade, right?
I'm thinking we could even go as tight as May. Is that too tight, you think? That's 53 days expiration right now.
Let's do it.
We could look at the 100 strike calls in May. They're trading at about 975, 980, depending on your fill.
Yep.
Plenty of volume there, plenty of open interest. 970 feels expensive, but dude, this thing could rip to 200.
Why not go further out of the money? I mean,
we could. I'm just trying to increase my odds of success. If we look at the 25 delta strike in May, that gets us at the 125 strike.
Mm-hmm.
And those are half the price. They're about 460. We can buy them for 460. Don't hate that.
And that's 125. I kind of like that.
Yeah, the 125s. And you know what? We could put a relatively tight stop on this too, like chart wise. I don't know if it loses 80, feels like maybe, I don't know. Is that too aggressive? A stop at 80? It's trading at 80. It's trading at 90 right now.
I mean, there's two ways you could do it, right? If this bull flag fails, you could keep it real tight. I would say even higher than 80. But if you're going to let it fall back into this, range since February, I think you kind of want to give it to 75. The lower bounds of the flag range. Yeah. Right.
I mean, look, you have to go into this knowing that if that happens, if it loses 75 and we pay 460-ish for the 125 calls, we're likely going to probably lose most of that premium.
Yeah.
But not all of it. I mean, depending on how quickly this fails, maybe we get out of these calls for $2, which is not a total loss, but it's it's one of those things that if this thing works, we're gonna crush it.
Yeah.
That's what I like about it.
This is a YOLO trade, and I'm into it because this is a YOLO market right now.
There it is. Say no more, Straza. It's a YOLO market. These are the types of trades we want to be in.
And
yeah.
And you know what, Sean, this is the poster child of short squeezes. The past couple of cycles now. This one is always top 5, top 10 of most heavily shorted stocks. We talked about how it fell 99% during the bear market. It also went up 10, 20x probably during off of the pandemic lows, the last bull market. So this name, when it goes, it really goes. And if you go out, so we're going out $35. That can happen in a week with this kind of a stock.
Okay, so I see some comments coming in the comment section here. One really good question here from Frey Lee says, so the IV being so high isn't an issue? IV is not
low
high at all, actually. If you, Gene, if you flip to my screen real quick, if you don't mind, I got the chart up here. At the bottom of my chart here, this blue line at the bottom, this is the implied volatility. I mean, it's been trending lower for the
Yeah.
past year. It's not the lowest levels, but this is affordable IV. I mean,
It might feel high, right, on an absolute basis, but relative to the typical implied vol for this kind of a stock, not bad.
right, this is not bad. And actually, I'm actually surprised by this. I expected the vol to be a little bit higher. Look, I'm looking at this chart, man, and these shorts who have these huge short positions, they've had every reason to cover this thing. I mean, there's so many places that, to me, as a short
Yeah.
seller, look like obvious places where I should have covered, and they haven't covered it. I don't know what they're being so stubborn for, but maybe they like pain. That's going to be to our benefit, stress. At some point, they have to cover, and like we said, it could really send this thing higher quickly.
Almost every other share is held short, and this stock just completed a trend reversal. Primary trend is undeniably higher for this name, and it still has a 40% short interest. So
Whereas,
short, yeah.
this is not something we do here at All Star Charts, but I'm doing it perhaps for the first time, Straza. I am issuing a strong buy in Carvana.
I wish I had my soundboard going because that deserves a noise. Yeah, I love it. I love it. I think this is the perfect kind of setup for this environment. Like we continue to kind of say here. My one question would be, say this thing rips 20, 30% in the next couple days or week or two, right? Which could very well happen. This thing could be up 20, 30% in a day.
Mhm.
How quickly will you want to be out? This seems to me like one of those setups where you got to buy more than one so that you could kind of maybe sell a double and then just, this is one you want to let ride for a while, no?
Yeah, I think in this case, Straza, you know that over the last several months, I've been being more aggressive with my position management.
Love it.
I've been kind of backing away from just automatically selling half of my position when it doubles. There's
Yeah.
nothing wrong with that, but I felt like this has been the market to be a little bit more aggressive. But in this name, considering that we're buying a strike that is $35 out of the money,
Yep.
maybe the prudent move here is if we get a double in those calls, let's just sell half, take
Yeah.
half off, maybe a little bit more. I don't know, but sell something,
Yes.
right?
Yep.
Maybe a third of your position just to, cushion yourself a little bit because this is, look, if this thing does rip, which it could, it's not going to be an easy ride. It's going to be a wild
No.
ride.
And
We're going to have 10-point swings in either direction pretty frequently in this ride if this thing goes up to 200.
And that's, so let's talk about that from like a trader psychology risk management standpoint. When your account or even a specific position in your account is fluctuating thousands of dollars or, maybe 50% in a day, which these calls will, it can be hard to manage. For me, when I know I have a free ride, right? So I already sold the double and what I'm holding, I know the worst that could happen is it's a wash on the trade. I don't lose anything. I'm more likely to not sell a big red candle or hold on a little bit longer. And I think for this kind of setup, that's really how you want to manage it. To kind of be as hands off as you can, but there's going to be a lot of volatility that could make that hard. So I think selling the double is just so
Yeah.
critical here.
And also, this is a shorter term play than we would normally do. These are May options.
Yeah.
So, if you got money on the table, you want to take some of it quickly, especially if we're still out of the money. Like if Carvana trades up to one, let's say argument's sake, let's just throw it out there. Say it trades up to 115. We're sitting on profits, but our calls are still technically out of the money if we're buying the 125 calls, right?
Yeah.
So if we get to 115 in this stock, let's say late next week, we'll easily be sitting on a double in our options at that point, and
Yep.
we're still out of the money. So yeah, it does feel prudent to sell half when we've doubled, and then see what happens. And if this thing rips to 200, there's going to be plenty of profits to make this whole experience worth it.
I like this a lot. Sean, why do you think the implied vol is as low as it is? It doesn't seem to be adding up for me. We
That's a
got
good-
earnings too before expiration. We got earnings April 17th.
Yeah. I don't know. I would have to think that during this run up that happened beginning last May, that run up where it went from $5 a share up to 50.
Yeah.
I have to imagine that was, the implied vol rising was being driven by just people like us, aggressively bullish people noticing the high shortage, just saying, oh man, the risk is to the upside. They're protecting their upside. And that was driving volatility. And then from August through up until, February of this year, I mean, it was a wide range, but it more or less went sideways. And so when a stock goes sideways for a long time, it tends to ring out implied volatility. And then when you have a big gap higher, like we just had 4 or 5 weeks ago, that often will ring out some volatility too. But
You could see it. You see it right in the chart. Look at You got the gap up and volatility falls off a cliff down the lower pane.
chart right there, big collapse.
It's cool.
But honestly, I'm surprised volatility isn't higher. But hey, we're going to put that to our advantage. Let's go. Let's do it.
I'm putting this one on. So let's go.
Yeah, we're doing it.
Chief,
So
as the chief YOLO officer, I can't not put on YOLO bets, right? So I have to kind of.
yeah, I love it. So Straz and I, we love the May 125 calls in Carvana, ticker CVNA. We're going to pay probably about $450 for them by the time we get this trade on. And look, this thing's either going to rip or it's not going to work. We're going to lean against I don't know about you, Straza, but I'm going to lean against the 75 level as my stop. If we lose 75, this trade is invalidated, at least for me.
I'm with you. Yep.
And we're going to sell half at a double if we get a double, and then let the rest ride into May.
So that's the bull flag range lows that we're going to use as our stop. I'm totally with you, Sean, 75, because then not only do we know that the bull flag is not breaking out, but in fact, we have confirmation that it's failing and resolving lower. We would want no business being in this at that point. And it gives us time, it gives us room to let it dance too.
Yeah, right on. Well,
Sean, yeah.
I was just going to give a shout out to Frey Lee. He says he's learned so much in this short little session. So I'm glad we're providing value to somebody here, Straza.
And this was a fun one. I also think that we're all due for a conversation. Like you just alluded to it. I've been saying it. We're all doing things that we kind of wouldn't normally do, right? This is a strategy that we wouldn't use or a kind of trade that we wouldn't put on in most market environments, right? I know I'll speak for JC. He's over here trading these like Solana network meme coins. I'm jumping entries. You're easing your risk management protocols, right? I think we're all due for a conversation about how important it is to be aware of our own behaviors and kind of what information we get from our own behaviors, because we're all doing something similar these days.
Sounds like a good conversation to have in Sonoma when we all get together in May.
I like that.
Yeah.
Well, we can call it bull market behaviors.
I see Krutsky just jumped into the chat. What's up, Krutsky? Yes, we only provide value. That's right.
Are you guys hanging out tonight at a traders meetup?
I don't know. Jason, you coming to our meetup tonight in Denver? I hope you are, buddy. Put your snow boots on. There's a lot of snow out there today.
I always get FOMO when I see the pictures of you guys hanging, talking stocks, options.
Yeah. All right. This has been the YOLO show. Hey, we got a new name. This is the YOLO show.
We should change it only for bull markets. We'll rebrand as the YOLO show.
Yeah. This has been the Flow Show, where Straza and I like to come up with trade ideas on the fly, show you guys how we work through our process, and glad to see that we already got some people confirming that they're seeing value from watching me and Straza go through our process. This is what we do every day at All Star Charts. So thanks for tuning in. We try to do this every Monday. Sometimes there's holidays and that gets in the way, and sometimes one of us is traveling, so we don't do every Monday, but we try to do every Monday. So we'll see you next Monday. Straza, great job today, buddy.
This was a fun one. Later.
All right, see you, everybody.